Wonderful. Good afternoon, ladies and gentlemen. It's nice to meet you again here on Wednesday afternoon. And you know, Wednesday afternoon is Marcus time, and I'm really happy that we can have this almost last webinar for this week. I will finish this year. I have the great honor to finish this year next Wednesday, and no, over next Wednesday on the next Wednesday I have one, and then at the 13th, yes, it's my birthday. Oh, I make a webinar on my birthday. Great, great. So, guys, hi everyone. Today we are going to talk about investment strategies to learn before trading. This could be really interesting. And we want to talk about special topics like different strategies, different trading investment strategies, like value investing, growth investing, momentum investing, and then how you have identified your strategy and what they have in common. So you see today, it's we want to talk a little long-term thing, and I hope you make sure you will make sure that you stay until the end of this webinar, or maybe the end of this video later on YouTube, because I want to show you why you don't have to focus exclusively on annual returns when you're choosing a specific strategy for yourself. So my name is Markus Gabel, and I'm a trader, professional trader, of course. I love to teach people. I want to encourage people. I'm a speaker in German and English. More than 20 years experience right now. I have my own trading education service, How Trading. You can Google it. And of course, I'm a trader at the asset management firm Baum Starberg & Partner in Switzerland. We have different branches in Germany and of course in Japan, in Tokyo. And yeah, if you want to have a special call with me, I'm always here for you. Click on the homepage, tradingandpersonality.com. In this webinar series, Trading Spotlight, I'm partnering with Admiral Markets, which is a Forex and CFD broker that offers trading over 8,000 different financial instruments through one of the world's best trading platforms, MetaTrader 5, and of course, MetaTrader 4. Finally, if you're watching this on YouTube later, guys, then remember to like this video, to share with other traders, they will be around you, and subscribe so you will never miss an episode. Okay, today's topic is investing. So where is the difference between investing and trading, and why you should know how to invest? I guess the main difference between trading and investing is the time frame. As a trader, maybe you're a day trader or a swing trader, then you are engaged in a trade maybe a couple of hours, minutes, maybe days, sometimes maybe weeks. But if you're an investor, then you are investing in a special security, of course. And investing is not only buying stocks. That's maybe your perception. Never forget, there is never an ultimate truth. So this is like always the example of the pen, you know. You are human and you see this pen, but if the dog will come in and I will show the dog the thing, then the dog will bite on it. It's a chew toy. So for the dog, it's a chew toy. So this is a kind of perception. So, and there is no ultimate truth, especially never on the right side of the chart. So maybe investing in shares is one thing of investing, but also you can investing in a commodity, maybe gold or silver, and also investing in different securities like euro or maybe dollars, maybe, but it's more the main difference is always the time frame. But everything what I want to teach you, I want to tell you, you should know, by the way, it's just my private opinion. And you know, this is kind of my mission, that I want to give you some precious value you can use for your own trading. And very often I try to explain things like the thing with the pen you can use for your own life, because I want to make sure that your life is as precious as well. and as precious as possible. So we have only this one life. So we have to make sure that we can be an example for our friends and family. Don't talk too much, do it. So it's the slogan of Nike, just do it. And this is more than talking. So this is why you can have a look at my public accounts. You can see I don't want to talk too much. I show you my results. So I'm in the third year in a row with profits. And this is not by accident. Of maybe you can be profitable by accident, maybe through 3 months or maybe 1 year. But if you are profitable during the time of at least 3 years, then it's not by an accident. It must be a special strategy. And by the way, this is really deep knowledge because I'm focusing of the cause, not the reaction. This is a kind of karmic principle. So I have a question. Ming, welcome. I guess your name, it's I'm kind of Asia, right? I'm think about it. So I have a question that why I take order, then price always turn back to my stop loss. Why don't price to go like I think? I remember I asked exactly this question by myself when I started with trading. And it always was a time I thought, oh my God, where are the cameras? They are watching me. The prices always go in the opposite direction. I want to trade. But this is deep, deep knowledge. And by the way, I would say take a teacher. Take a teacher who can teach you how to trade. There is not an there is not, how should I say, there is not a basic answer to your question. This requires a lot of education. But by the way, if you make this experience that the price always go down or go in your stop and not in the way you think, it's about the focus you think. I come back to the pen. You see, for you, this is a pen. For the dog, it's a chew toy. Would it be an if it were be if it was an ultimate truth, the dog would write a letter with this pen, but it didn't. But the dog doesn't. So, and this is what you said. What you think. You're on the right side of the chart. No one is interested in you what you think. The market doesn't know you. So you have to learn how to play that game and how you can follow the elephants. And I guess they don't have spies, of course not. I'm not sure if they had spies, but there are alligators in the water hole. And but my answer to your question is take a teacher that you can learn trading. It is possible. It is possible. And if you follow Jens, Paul, and myself on the YouTube channel, and my host will give the link in the chat to our YouTube channel, you will learn a lot about that. But it's not that way that you can learn about everything in the webinars or in YouTube videos. Most of the thing is like learning a language. So maybe if you want to learn Germany or German, I guess you will always take a teacher. If you take it online or in person, then it doesn't matter. But my private opinion is take a teacher, then you can learn it very fast. Then most of the times the price will go in your direction and not against you. Okay, but today's topic is how we can invest in different times. And by the way, but you can ask whatever you want. Thanks, Roman. You will find in chat now the link to our YouTube channel, and there you can follow all my webinars and Paul's webinars, and of course, Jens' webinars as well. And please don't hesitate to ask whatever you want. If I have time, I will answer your question because this is your webinar, guys. You are the VIP persons here. I'm not interesting. I'm just sharing my ideas and sharing my knowledge with you and my experience with you. You are more important, so much more important than me. And Edmund Mark is focusing on you. Dalius, hello. Okay, so if you choose one investing strategy, and it doesn't suit your risk tolerance or schedule, then you can certainly make changes. And I want to introduce you to 3 different investing strategies today. And by the way, there's a special word in it, so you can see, I will mark it for you. For this, you can see this word risk tolerance. So, what should I say? I have a special opinion about the word risk tolerance. Let me ask you a question. How do you feel, not thinking, how do you feel if you listen to the word risk? What do you feel? Come on, type it in the chat box. Listen to the word risk. What feeling occurs in your heart, in your mind, if you hear the word risk? What do you feel? Type it in the chat box. What do you feel? Not what you think. Close your eyes just a moment and feel. If you hear the word risk, what do you feel? Strength, fear. Oh, I can read 3 times the word fear. Or what do you feel if you hear the word risk? And of course, yeah, or possibilities sometimes. Risk, yeah. But guys, what I want to teach you, this is about the pen again. Don't think about the action or the reaction, always think about the cause, the deeper cause. So what does it mean, risk? Risk, if I listen to my own word risk and I feel it, and I feel fear as well. So next question, do you feel fear sometimes if you open a trade? No risk, no profit. Maybe this is your own perception, but it's maybe right, of course. By the way, there doesn't exist right or false in trading. It's just a kind of perception. So do you feel sometimes fear if you open a trade? So Ovidus says yes. So type yes or no into the chat box. Do you feel sometimes fear if you open a trade? Say yes or no. So, okay. Oh, I got a lot of yes. Okay, great. So yes. So you see, you have risk, which means you feel fear. That's completely normal. So join the club always. So if you feel always fear, then you have to go a special way to learn trading. So today, by the way, after 20 years, I never feel fear. It's a kind of excitement, yes. No, it's a kind of wondering. What will I experience with that trade right now? But fear is not the proper feeling you should feel if you open a trade. So, and therefore, if I teach people, then I replace the word risk to money management. But then, why is it? And if you are honest to yourself, if you manage your money, there is no risk. Why is it? So first of all, a stop loss should protect your trading idea, not your money. Completely revolutionary idea. Trading stop loss should protect the trading idea. So as a consequence, there is no reason to switch or to move your stop away, because is your trading idea gone, or is it's broken? No one should protect your trading idea. So what protects your account? Money management. And this is the deeper cause why you shouldn't feel fear. But you see, there are so many things we should think about. But this is just some ideas you can write down on a paper and think about it. So after the webinar, take your time and think about this special topic between risk and money management. Today, I can say, and this is what my mentors taught me, there is no risk in trading. You have your stop loss. Stop loss protects your trading idea. And the other one is manage your money and put it down in a special area. You will never feel fear. And then you can follow you can follow the elephants, of course, and then you can follow your plan and your trading ideas all the day, all the way. So this is a special idea you can think afterwards the webinar. So, but by investing, if you change the investing strategy, there is a special word forewarned. It could be very expensive because every purchase carries a fee. More importantly, selling assets like shares can create a realized capital gain, which is taxable and therefore, on the other side, very expensive. So here we look at 4 common investing strategies that suit most investors. Not everybody, it's not an ultimate truth, of course not. And by taking the time to understand the characteristics of each, you will be in a better position to choose one that's right and fit for you. And on a long, of course, on a long run. So that was wrong. So before you begin to research your investment strategy, it's important to gather some basic information about your financial situation. And today we don't talk about trading, we talk about investment. So should you be an investor as a trader? Yeah, of course. Because trading could bring you your daily incoming, and investment is a long-term thing. So don't mix it. And by the way, this is why you can have maybe 2 accounts at Admiral Markets. If you have a special amount, then split it. And one you can take for investment and one you can take for trading. And don't mix it. So you can compare every year the results of both. So there are a special key question we should ask ourselves. So what is your current financial situation? Do you have a lot of money or don't? So do you have a special money on your side, or do you have a job actually, or you are suffering about the coronavirus right now? Or what is your current financial situation? This is what, if you don't have money, you don't have to think about investing. So if you don't have money, or if you have less money, you should think about to become a trader and to be a trader. So to become a trader is not the problem. To be and to remain as a trader, this is the bigger challenge, of course. And if you have less money, then learn, first of all, to become a trader and to make trading results. And if once you make trading results and you have you can grow up your account, and you can put some money and take and start to kind of investment. So if you have no job, then I'm really sorry for it. I will pray for you that you will that you will get a job very soon. And but therefore, this is more important. If you don't have a job, then please be careful with your trading and focus on doing the proper things and follow the rules. A job is not possible. Then I'm really sorry. How should I say? I believe in different things. And maybe you should know I'm working with karmic principles. And maybe you can help another one and plant the right seeds for that. And then the job will come into you. But first of all, plant the right seeds. And maybe you can help another one. But it should make a different webinar about that topic. Okay. Next question. What is your cost of living, including monthly expenses and debts, of course, and how much can you afford on invest, both initially and on one going basis? So these are 3 really important questions. So I think that working and trading at the same time is a good thing, not so hard to combine. Yes, if you find the right thing, the right time frame for you, And don't never forget the word probability, of course, deeper cause of probability. I collect money from the internet for free to trade. That's a good idea. But the better idea is do something for other people. Plant the right seeds for that. If you want something, first of all, you have to plant it. Think about it. Please, this is just an advice for you. So even though you don't need a lot of money to get started, you shouldn't get started if you can't afford to do so. So if you have a lot of debts or other obligations, consider the impact investing will have on your situation before you start putting money aside. And if you don't have too much money, maybe $100 or $200, start with trading, or maybe invest first in your education and then start with trading. And then once you can grow with your accounts, then you can put some money aside to start for investing. This is an interesting idea. I started with this a couple of years ago. Next, set your goals. Everyone has different needs, so you should determine where yours are. So maybe you can type in the chat box where you come from right now. So I know different people have different needs. There's a big difference if you live in Europe, Germany, France, wherever, or maybe you live in Africa, or maybe you live in Asia, or in East Europe. Wherever you live, you have different needs, because in Germany, we say 50 euros. Okay, 50 euros for me is a lot of money. So, but 50 euros or $50 for a family dad in Africa means you can feed your family maybe for 1 week, for 2 weeks, or maybe for 1 month. On Asia, whatever. So you see different people, different needs. So are you intending to save for your retirement? Do you have something, do you have some money as aside for your retirement? Or do you think your kids will care for you? And maybe it's a question of culture, of course, maybe in Africa. But please, guys, don't forget, time is changing. We have Corona right now. And the next generation will pay the bills now for this Corona situation. And I wouldn't trust, or I wouldn't to be reliable for my kids that they will care for me. Maybe it's the better thing you can care for yourself, and you learn trading, and then you can think about what you can put aside for your retirement. So are you looking to make big purchases like a home or car in the future, or are you saving for your children's education? So for what do you need that money you want to invest? And this is, and if you follow me a couple of times, then you know I will always talk about, do you have a plan you can follow? It's a trading strategy plan and investing strategy plan. Do you have a business plan? So maybe I asked you a couple of weeks ago, and I asked you, do you have a business plan? And almost 98% said no. Can I ask you a couple of weeks later, right now, have you started with building a business plan right now or yet? Come on, be honest. Yes or no? Type in the chat box. Have you started right now? Have you started to write down a business plan? Yes or no? If you say yes, I'm really proud of you. Be honest to yourself. Be honest to yourself. It's no problem if you say no. But then I have to teach you, and very honestly, start to to write down a business plan. This is really, really interesting. And this is really important, because trading is the business, and there is no difference between trading and investing. It's a business. And for every business, you need a plan. So write it down, like these questions. What are you intending to save your money for? What are you looking for with this purpose? What do you want to purchase something in the future? Whatever. Because the business plan is a kind to figure out what's your real why. Oh, this is interesting, right? Did you ever thought, did you ever think about this point? What is your real why in trading? Because if you have a really weak why, you will never follow your strategy. But if you have a strong why, you can keep this challenge and you can cope the challenge for getting losses and something else. You see, I will give you some just things to think about later. And finally, as you can see in the slide here, please learn the basics, of course. It's a good idea to have a basic understanding of what you're getting into so you're not investing blindly. It's like I taught you to think about the price. You see, if you don't have a direction of thinking about the price, you stumble blindly into the market. And by the way, guys, trading is not the path to bliss. It's a path to pain. But with pain, you will learn. You feel pain, then I hope you will learn. But trading on a long run, the target, the goal, yes, is feeling bliss. But the path, it's not called the path of bliss. It's called the path of pain. And therefore, next point, you need a teacher for that. So ask questions and read on to learn about some of the key strategies out there. So let's start with the first strategy. Well, it's called value investing. So Warren Buffett is one of the most famous value investors, and they are bargain shoppers. They seek stocks they believe are undervalued. Tesla is not undervalued, guys. Amazon is not undervalued. Apple is not undervalued. Of course not. But value investors are looking for stocks with prices that believe don't fully reflect the intrinsic value of the security. Value investing is predicated in part on the idea that some degree of irrationality exists in the market. And this irrationality, in theory, presents opportunities to get a stock at a discounted price and make money from it. So buy the undervalued price and go with a rising price. This is the main idea from value investing. So, but if you are a true value investor, you don't need anyone to convince. You need to stay in it for the long run, because this strategy is designed around the idea that one should buy businesses and not stocks. Think about it. We talk not about trading. Trading is action. Investing is you believe in something. So maybe it's kind of a relationship. Trading is not a relationship. You don't have a love relationship with the market. Market means fighting to each other. Everybody wants the best from you. Which is the best from you? What do you think? What is the best from you, what you can offer? Of course, test. I'm really sure this is not your right name, but I can read it, test Islam. Yes, everybody wants your money. And if you think it through again, guys, then you know it's market means, and investing is the same. If you buy something, or if you want to buy something, what do you need for it on the other side? Tell me, what do you need? If you want to buy something, what do you need on the other side? Type in the chat box. What do you need on the other side? Come on, guys. I taught you this a very often time. What do you need on the other side? On the other side, if you want to buy something? Yeah, right. I need it to get expensive. What do you need if you want to buy something? What do you need other side? Yeah, of course, you need a seller, right? And market means buying and selling. So you are sitting in front of your screen, and maybe you made a lot of research, and then you think, okay, I want to buy this stock. And if you buy the share of this stock, think about there's on the other side who wants to sell.
And if you think you are completely right in your decision, okay, unsurprisingly, on the other side, the seller is right as well. He said, "Oh, this is the right time to sell," unless he has to pay a bill and needs to sell. But you see, there's nothing right or false in trading. It's just a kind of perception. So my plan is to learn this job until I become prof, understand people in this world around me. That's two different things, but at the end, they belong together. So life and trading belongs together, of course. But if you want to learn it, take a teacher, a private teacher. This is a really cool idea. I did it. Unfortunately, I did it too late. But after 7 years, by trading myself, it didn't work. Of course, I took a trade. I took a teacher. Um, that means that invest in a special business. That means the investor must consider the big picture, not a temporary knockout performance on a long, long run. So this is why Warren Buffett loved to buy Coca-Cola, or why he were invested or he was investing in airlines. Okay, by the way, this was a bad investing, but he confessed and he mentioned a couple of weeks ago this was a bad investment, of course. But you see, even Warren Buffett is not always right all the time, not at all. But you have to do your homework, and maybe this will cost you a lot of years, but it's valuable. It's to do that. It's really worth to do that. But if your value investor is ready, he goes all in and is committed for a long run. So you invest in a special business. So maybe you think, I don't know, robots, something else, then do an investment. This could be really long run. So second one is growth investing. Rather than look for low cost deals, growth investors want investments that offer strong upside potential when it comes to the future earnings of stocks. It could be said that a growth investor is often looking for the next big thing. This could be computer intelligence. What is the shortcut? In Germany, we say KI. What is the computer intelligence? What is AI? AI. AI? Really? AI? Okay, thank you very much. It's AI. So, maybe this could be the next thing. Not in trading. Artificial intelligence. Thank you very much. AI. Okay, this could be the next big thing. Yes, but never in trading. Why? Okay, computer can trade very quick, but they don't have an awareness. A computer has no awareness of itself. He counts with 1 and 0. That's all. A computer has no perception, no awareness. But for trading, you need a kind of awareness. This is kind of perception. So, but maybe basically AI could be a really next big thing. So grow investing, however, is not a reckless embrace of speculative investing. Rather, it involves evaluating a stock's current health as well as its potential to grow, of course. A growth investor considers the prospects of the industry in which the stocks thrives. You may ask, for example, if there's a future for electric vehicles or cars before investing in Tesla. Not yet. It's too late right now. So wait if Tesla will come down a little bit. But I would say basically electric cars, driverless cars is really one of the next big things. Maybe this you can, but it must not be Tesla. There will come up other companies and firms. Tesla is the big thing right now. There must be an evidence of a widespread and robust appetite for the company's services or products if it's going to grow. Investors can answer this question by looking at a company's recent history. And simply put, a growth stock should be growing. The company should have a consistent trend of strong earnings and revenues, signifying a capacity to deliver or grow expectations. Maybe it's not the big thing to invest in a very young or recent found company. It should be here have really strong earnings through the last maybe years. Then you maybe have the idea that you invest in a growth investing. There are also flying cars in production. Yeah, of course. We have some flying taxis or cabs here in Munich. Munich, there's one of the most famous companies, and we have some examples in Munich with flying cabs. And this is, I'm absolutely sure, one of the next big things. And this is really, really interesting. Cars without drivers first will be used for delivery, and this will change industry of expect. Yeah, of course, I'm absolutely with you on your side. Okay, so growth investors also need to carefully consider the management prowess of a business executive team. Achieving growth is among the most difficult challenges for a firm. Investors must watch how the team performs and the means by which it achieves growth. Growth is a little value if it's achieved with heavy borrowing. At the same time, investors should evaluate the competition. Just stop looking one firm. You have to think about the competitors, of course. A company may enjoy stellar growth, but if its primary product is easily replicated, the long-term prospects are really dim. So, you know, we have special countries, they love to replicate some things and can make it really, really cheap. Then it's a little bit stupid. Okay, then strategy number 3, momentum investing. Momentum investors ride the wave. They believe winners keep winning and losers keep losing. They look to buy stocks experiencing an uptrend because they believe losers continue to drop. They may choose to short sell those securities. Think of momentum investors are technical analysts. This may mean that use a strictly data-driven approach to trading and look for patterns in stock prices to guide their purchasing decisions. This is what basically means momentum investing. Oh, that's the wrong way, sorry. So, Mr. Rob Arnott, chairman and founder of research, man, Jesus Christ, affiliates researcher this question, and this is what he found. No US mutual fund with momentum in its name has, since its inception, outperformed their benchmark net of fees and expenses. That's really, really interesting. And interestingly, Arnott's research also showed that simulated portfolios that put a theoretical momentum investing strategy to work actually add remarkable value in most time periods and in most asset classes. However, when used in a real-world scenario, the results are really poor. Why? 2 words: trading costs. Cost momentum investing means you have to go long and short. Then you have a lot of trading costs. All of that buying and selling steers up a lot of brokerage and commissions free. Do you know why so many people fail in trading? By the way, not investing, trading. If you trade on a demo account, maybe you're really successful. It's fine, it's completely nice. But then you switch to a real account. And after a while, you will realize, oh my God, I have a lot of costs. Damn it. And these costs reduces my profits a lot. And by the way, if you have losses and costs, you are more in loss. Never forget that. This is one of the specific reasons why so people never come into the profits at all, of course. Okay, first, if you want to identify your own strategy, growth investment, value investment, or investing or momentum investing, figure out how much money you need to cover your investments. If you don't have money, think about to invest in your education, then learn how to trade to grow up your account. Then you can take money from your account and put it into an investing strategy. That includes how much you can deposit at first, as well as how much you can continue to invest going forward. Consider your investment vehicles. Remember that it doesn't help to keep your eggs in one basket. So make sure you spread your money around to different investment vehicles by diversifying. This is one of the most topics I teach in my coachings. I teach around about 8 different strategies, which means we have trading and investment strategies. Why is it? And you can do it by with 200 euros, for example. If you have $200 for your account, put it in 2 things. Take 100 for trading, real trading, not gambling, real trading, and 100 for investing, different strategies, different strategy. Okay? Try it. Okay. And think about investing. It's kind of roller coaster. And so you have to control your emotions. It may seem amazing when your investments are making money, but when they take a loss, it may be difficult to handle. It's similar to trading, of course. And that's why it's important to take a step back, take your emotions out of the equation, and review your investments with your advisor on a regular basis to make sure you are on track. Oh, do you see the right word here? By the way, I did it on purpose, of course. Your advisor. Every experienced trader had in the past, or have in the past, a teacher. Even Mr. Stanley Druckenmiller, one of the most famous trader at all. Who was his teacher? Yeah, George Soros. Do you know George Soros? Google it. Most Forex trader, most famous Forex trader at all on this planet Earth. Yeah. And of course, Mr. George Soros, who was the man who broke the Bank of England. And Mr. Druckenmiller was his assistant. And he learned from Mr. George Soros. And so, by the way, every experienced trader knows it's not enough to watch a webinar or watch a video. So, bottom line, the decision to choose a strategy is more important than the strategy itself. Indeed, any of these strategies can generate a significant return as long as the investor makes a choice and commits to it. Make a commitment. We talk about a long run investment, guys, long run. The reason it's important to choose is that the sooner you start, the greater the effects of compounding. Remember, don't focus exclusively on annual returns when choosing a strategy. You should be really reliable, and of course, you should feel comfortable with this strategy. Don't make copy paste from another one. Trading is an individual thing. It's a personal thing. We talk about money. And by the way, it's like having sex, guys. Money is like having sex. It's a personal thing. Don't go out to the street and say, oh, I like this position. I like this position. Okay, man's among which the other, yeah, they talk about it. But it's a private thing. So therefore, I'm not a friend from seminar or something else who or involved a lot of people's money is a private thing. It's a really individual thing. And you have your own needs and your own feelings, your own believing tenets in your mind. So think about that. Engage the approach that suits your schedule and risk tolerance. Think about what money tolerance, risk tolerance. Ignoring these aspects can lead to a high abandon rate and frequently change strategies. So my God, time is flying by, right by, Jesus Christ. We are done. Before you figure out your strategy, take some notes about your financial situation and goals. Value investing requires investors to remain in it for the long term and to apply effort and research to their stock selection. Investors who follow growth strategies should be watchful of executive teams and news about the economy. And momentum investors buy stocks experience an uptrend and may choose to short sell those securities. And remember, never focus exclusively on one or on annual returns when choosing a strategy. Okay, this was a little bit a side of trading, but as a real trader, if you want to spend your money for your kiddies or for your purchase some things or for your full and right retirement, you have to think about this things about investing. And of course, I don't want to leave you behind. I want to leave you behind this webinar. After this webinar, I want to invite you to our Trading Spotlight community. You can see register with TradersYard on tradersyard.com. Actually, we have more than 200 participants at the moment, this wonderful family. And there you can follow Paul Jens and, of course, myself. Next Friday, 18th December, my continuous partner Jens is talking about the top 5 risk management tips for your Forex trading. Stop loss he will talk about, and limit your use leverage and diversify your Forex portfolio. You see diversification as well. And what should I say? Thank you, guys. Think about the pen. You know, it's not an ultimate truth. And I want to tell you this really important point. Focus what you can do for other people. And then the result will bigger than you ever think about. Believe me, this is really, really important. So I hope you were satisfied with this value today. See you next Wednesday again, or in our community, Trading Spotlight community. Thanks to Roman, my host. Beyond the scenes, thanks for opening this webinar, for supporting me. And guys, I want to say, be careful about your thoughts. You know, they are the beginning of your actions. See you. Bye-bye.